Good morning. It's January 24th. It's Market Monday at First Capital and Go Plan 101. Today, we're going to talk about what's going on in the market. And it's going to be a tough week, we think, ahead of us again. Unfortunately, we've gotten a third week in a row. We've got the indices really pulling off from their highs. The NASDAQ was down 8%, S&P 6, Dow Jones 5. So we've got everything from rising interest rates. We've got conflict in Ukraine. It's kind of a hot mess out there. We got a lot of anxious people, and I can appreciate that. The VIX as a fear indicator jumped from 19 to 29. Bitcoin is off 10% on the week, so it just shows there's not a lot of risk appetite out there anywhere. China has theoretically said they're going to do better this year, as much as an 8.1% growth rate. We'll see what happens. They have their own way of doing business, which is government controlled. They can do things which we generally can't, so it's hard to exactly say, but they are in the depths or coming out of the depths of what could be a slowdown over there that could last a little while longer, but it makes it interesting from a contrarian standpoint, whether or not that's something we should start thinking more about. NASDAQ and tech folks have been hammered, 10% from a recent high. We'll probably be 15%, 16% this year. We're off this year, today anyway, another 1% plus. When you look at what's actually going on from a report standpoint, an earnings standpoint, we've had pretty decent earnings, and the expectation is that the earnings report will continue to exceed the expectations, at least on the majority of reports. Some haven't been so stellar, but many have. It seems like as soon as they reported good earnings, at least the traders are selling them off. So that's usually not something you'll like to see. But we have decent earnings, and earnings is what drives it. So it looks like with the increase of interest rates, we're having this just basic repricing of what profits are worth in the future. And that's creating this little whipsaw market. Volatility has been higher, as you can imagine, with the VIX being up, where we've seen days where it starts off negative, goes positive, turns negative. We've got a lot of end of day selling, which is just sort of a panic trade out there. So got a busy week this week from a Fed standpoint. That's going to weigh on the markets quite a bit. When you look at what actually is going on, it's been a pretty rough year to date. We probably will have, I'm thinking, probably one of the worst Januaries on record, particularly for the NASDAQ. So we are doing what we can to watch and wait and learn. This is what they call a market correction. It's definitely painful. A contrarian would look at these opportunities, and that's exactly what a contrarian would do, look for opportunities. And we think that there are some here. It looks like the emerging market space might actually provide some opportunity in select places. This does give us an opportunity to do some tax loss harvesting, which we'll use to offset gains in the future. In terms of resetting the portfolios, we are raising or have raised cash. We've got about 5 to 6% cash. Some portfolios have as much as 10% cash. So we're looking at to reinvest when the opportunity does present itself, which we think it will. These tend to be pullbacks, and unless something crazy goes on in the Ukraine, which who knows, we should have opportunity for a bounce where the market recovers. So we're looking forward to those days. I'm sure you are too, but stay tuned. We'll be diligent as ever. Thanks.